Good afternoon, everyone. My name is Kate Pipa. I'm the events coordinator at the Bridgeport Regional Business Council. And I'm just letting you know that I'm recording this and we will share the link with you when it's finished, as well as the slides for the presentation. So I am very excited to welcome Jeri Ann Cook. She is a member of the BRBC, and I just want to do a brief introduction. So Jeri Ann completed her MBA at the A.B. Freeman School of Business at Tulane University in 1996 and initially pursued a career in quantitative analysis and marketing higher education. So turning her attention to a young family in 2002, Jeri Ann held leadership roles in a number of charitable community service organizations, including International Women's Club Chapter of Sofia, Bulgaria, and Woodcraft Folk in London, England. It was in these positions that she came to appreciate the need for well-kept books to enable smooth operations of an organization, as well as to meet the demands of legal and tax authorities in varying jurisdictions. In 2017, upon returning to Stratford, Connecticut, Jeri Ann decided to apply that interest and those skills professionally, launching Sunstone Bookkeeping to serve the bookkeeping needs of small business owners. Jeri Ann is a member of the American Institute of Certified Bookkeepers, the Institute of Certified Bookkeepers USA, and the American Pet Professionals. So thank you, Jeri Ann. We're very excited to have you. And I just want to let folks know that she will be taking questions at the end, but I think if you don't mind just holding them to the end, and we'll get to them then. So here we go. Welcome, Jeri Ann.
Well, thank you for that lovely introduction, Kate. Today, I'm going to be presenting the care and feeding of your business finances. This isn't going to be an overly detailed instruction seminar on operating accounting software or classifying transactions for taxes, but it's going to give you a higher overview of a bookkeeping system to keep your business happy and healthy. So I know that Kate just went over my biography a little bit, but just a bit more. Again, I'm the co-owner of Sunstone Bookkeeping, LLC here in Stratford. I did get my BA and my MBA from Tulane University. Oddly enough, my husband and business partner got 3 degrees from Tulane, so I think we could probably get a deal that our kid goes for half price. I'm currently owned by 3 cats and 2 dogs. This becomes important in a couple of minutes. But more importantly, I'm committed to helping people get comfortable with and control over their financial lives, both personal and business. And a little bit about our firm. As Kate mentioned, we are in Stratford, Connecticut. We focus our marketing on pet professionals, veterinarians, kennels, boarding and daycare facilities, groomers, pet supply retailers, breeders, basically anybody who works with folks who need pet supplies or services. We are a cloud-based bookkeeping firm, so while we do have many clients in the local area, we do also work with clients around the country using online software such as QuickBooks Online or Xero, and cloud storage systems. And we're currently a 2-partner firm. I'm in charge of marketing and strategy, and my husband Jason handles the operation and analysis. So a very brief definition of bookkeeping. It's the recording, classifying, and reporting of all financial transactions in a business. It includes accounts receivable, accounts payable, payroll processing. If the bookkeeper is properly accredited, it can include tax preparation. And it can include auditing if your bookkeeper holds a CPA license. It's not required to do bookkeeping, but it is required for auditing. And it may be performed by the business owner, an employee, or an outsourced bookkeeping or accounting firm. Now, at this point, most attendees for this kind of seminar, at least internally, are feeling like one of these 2 images, which is understandable because usually bookkeeping and accounting seminars from this point go on to intricate industry techno jargon, but I'm going to take a different approach. And to help me, may I please present our models and corporate mascots. These 2 lovely fuzzballs are our dogs, Biller and Hyela. They have all those fancy words in front because they're registered with the American Kennel Club, because they're both purebred Icelandic sheepdogs. It's one of the older purebred dogs. Evidence of their existence is in history in the Nordic tribes to about back to the 9th century. They are Icelandic's national dog. They were just admitted into competition for the beauty pageants or conformation back in 2010. And as you can see, our girl Hyela actually has earned her championship status, But she came to us as an adult after her pageant days, and she's now enjoying a very relaxing retirement life with her half-brother, Biller. We've had Biller since he was a puppy, and he has not enjoyed the glamorous life of conformation, instead just being completely spoiled with affection and bacon treats. So Biller and Hila are going to help me in comparing how to organize and manage your business finances with how to care for and raise puppies. So first on the list is nutrition. Now, pet owners and carers take a lot of time and do a lot of research for the best possible food for the breed, the size, the jobs, and even our budget, because we know food and water are vital to our dog's health and well-being. Now, the equivalent for your business financial organization is the transactions. The money coming in and going out is vital, but you also have to know the details behind that money. Specifically, the transaction records need details that are appropriate for your industry and your business goals. So I do a lot of work with groomers, and for them, knowing the different types of brushes and bladed instruments is sometimes a detail they want to track for spending. Also, for any kind of boarding facility, we compare daycare revenue with boarding revenue. Whatever category you want to look at for trends should be explicitly put into your financial organization system. You don't want to go too crazy because every single item in a report is just too much information. But you should always think about what your business goals are and how your income and expense tracking could provide you information that helps you reach those goals. Now, knowing what kind of food is important, having it in the cupboard is also part of the equation. Similarly, having your financial receipts, statements, invoices, bills, reports, and other paperwork available to put into the system is vital. Now, the image of the overflowing box full of receipts and papers is extremely popular in comedy skits, but it's also very true. I personally have received very large boxes of paperwork from clients that need to be organized and input. And to be honest with you, it makes me a very, very happy bookkeeper. One thing we bookkeepers do not like to do is guess. We like to have backup to explain our entries. Now, the paper pile can get overwhelming, which is why we suggest cloud storage. A great feature on a lot of the accounting software applications is that you can actually attach a PDF or an image to each transaction as backup. The problem a lot of business owners say is, I do not have time to deal with this. It's just way too much stuff to go take to a scanner. However, you can use your phone. A lot of file share and accounting applications have a scan function that integrates with your phone's camera. So let's say you have to go to the Big Y and pick up some cleaning supplies for your office. You use your credit card, you get a paper receipt, you open up your application, take a picture with the camera, decide where to save the image, and it's in your files ready to be put into the accounting software, or if you use the accounting software app, it's right there. Now, I have heard customers and clients tell me, it's too much work. I'm never going to be able to remember that. And one client in particular said he just did not think he'd be able to fit this into his routine. And I said, okay, I get it. It's tough to learn a new task. Hey, how's your granddaughter doing? And the first thing he does is pull out his phone and show me pictures. And then he looked at me and I looked at him and he said, okay, I get your point. And he has been sending me photos of receipts ever since. Now, another issue that comes up when we're talking about cloud-based accounting and file sharing is headlines of hacking of records. And yes, that is understandable. You should always review security protocols of any software you use and look for features like two-step authentication. That's where you have to put in a password and then you get a code sent to your phone or your email. What's called a protocol called SSL, Secure Sockets Layer, that's protecting the data when it's in transit between the storage app and the servers. Zero knowledge encryptions, that's where you are not allowed to save your password on your browser. As convenient as that is, it's not a great idea. But the one thing you should not do is don't think desktop-based storage alone is going to be the solution to keeping your files safe. I had another client express uneasiness with putting business records in the cloud because she thought anybody could get them. She wasn't fully assured at that point by all my explanations of the password protections. So I pointed to her business laptop on her desk, FYI, the only one for her organization. I said, hey, can you hand me that for a second? And she handed it to me, and I put it in my lap. I put my hands on top of it. And I looked at her and I said, now what? And then she understood what I was talking about, and she has been successfully and happily using the cloud storage system, and we've had no issues so far. So to make sure your business finances have a nice full belly, make sure the food is in the cabinet at all times. Now, another important aspect of owning a pet is routine. Michaela may not be able to tell time, but she certainly knows when it's time for a walk. Dogs and cats like routines such as walk schedules, feeding schedules, even brushings and baths, because it's important for their mental health. There's comfort in knowing what's to be expected. Now, for your business, you should also have routines. Record keeping and workflows should align to your business's natural routines and not the other way around, with one very clear exception of the tax authorities. So go through your customer workflow and align your financial ones to suit. You probably have several workflows in place. For example, if you have employees, you already have a deadline and process for payroll, either with yourself or with a payroll company, as well as scheduling the payments for taxes. Also, you close out the register each night. You count the cash and you count the checks. You should also, by the way, count your credit card sales to reconcile them with what the payment processor sends to your bank. And other workflow examples include scheduling a day to pay bills, to send invoices, reconcile your bank accounts, which is a bookkeeping talk for balance and checkbook, and so on. So these workflows will keep your things running smoothly, your employees will know what to expect, and your vendors and tax authorities will be very happy for timely payments. Now, one routine that is very important to implement is to only use your business funds for business expenses. This is one of the few big accounting things I'm going to mention today, and that's called the economic entity assumption. And that states a business entity's finances should be kept completely separate from those of the owners, partners, shareholders, or related businesses. So not only do you need to avoid making personal expenses from business funds, you need to use each business location account for that particular business. Now, this is something that gets drilled into baby accountants' heads from day one of class, because the IRS and state tax authorities frown very deeply on the practice called commingling of funds. In the real world, we do see it a lot. In fact, in 2017, Chase issued a note to some of its business customers because the bank had noticed a lot of activity on its corporate credit cards that did not appear to be business transactions. So no matter what business structure you've chosen, you should have a goal to have zero personal expenses paid by company funds, with the very obvious exception of paying yourself based on the legal and business structure you've chosen. Now, there are ways that you can take money out of the business, but you should come up with a plan to do that with the help of your tax accountant to make sure you and the business are protected. Oops. If you own a pet, you know that sometimes routines are going to fall through the proverbial cracks. You're supposed to brush ices about once every few days, but as you can see here, there had not been a brush touching the fur for a while. We had the best of intentions, we had our routines in place, but we just didn't get to follow through with them. What we did do, though, when we realized it was more than we could handle and our house was about to be taken over by Icelandic sheepdog floof in the corners developing language skills, was to take them for a quick brush out at the town groomer, which resulted in that mass of fur being brushed off, and two slightly more slender but much happier dogs. Now, the same goes for your financial books. Sometimes you have all the right paperwork, you just haven't had a chance to get everything entered, or you haven't had everything categorized, but it is very important you get caught up, because like your dogs, your books are not self-grooming. You need to rearrange your schedule, outsource the work, whatever is best for your comfort level and your budget, but please get it done. It makes tax prep easier, business planning more effective, and your stress levels are much lower. So next we have training. Now, Michaela and Bill are both good learners, even at 10 and 11 years old. With patience and incentives, aka bacon, we're still able to teach them new tricks. And it's important for them to keep learning because, number one, it helps them to know how to behave in certain situations, and it also helps keep their stress level down. They These two in particular need mental stimulation to keep them even keeled. We could take them on a 7-mile walk and they look at us like, and? But if we train them for an hour, they'll take a very long nap afterwards. Now, I'm not saying you need to get worn out like an icy to train on a new skill, but it is vital you have some basic education on bookkeeping and accounting. Now, to learn your software, there are many, many tutorials and courses and help modules, as well as learning the accounting module of your business management software. For bookkeeping, you don't need a degree, but you should know the very basics so that when you're looking at a financial report, your stress levels are a little lower because you can understand the basics. So we're going to go over a little bit of accounting, double entry bookkeeping, and a few examples of how transactions look at the start of the business. I know, techno jargon, I apologize, it will be brief. The accounting equation is assets equals liability plus owners or shareholders' equity. In English, that means what the business owns equals what the business owes plus what's left over for the owner. So your assets are everything that came into your business: the cash, the tools, the building, the tables, the fixture, the inventory. All of this comes into your business in one of two ways. You borrowed it, which would be what the business owes, or what's left over, money that the owner puts in or earns through revenue. So in theory, you could have a business that buys everything with cash and never takes out a loan or a line of credit, or you could have a business that is all loans and credit. Usually it's a mixture between the two though. Now, you'll sometimes hear what's called accounts. What these are the the categories within a bookkeeping system. They just call them accounts. It sounds a little bit confusing because bank accounts, checking accounts, and expense accounts sound a little bit different outside of bookkeeping and accounting. But basically, categories in a bookkeeping software are called accounts. And the complete list of them is known as the chart of accounts. And it's not just one long laundry list, though. It actually does have a little bit of structure to it. It has 7 general categories, 3 of which you just learned: assets, liabilities, owner equity, revenue and expenses, and then gains and losses are from when you sell an asset and you either made money or you lost money on it. Sometimes you'll see them starting with particular numbers. Assets will start with a 1, liabilities with a 2, etc. But this is the general way that they get grouped together. Now, you've probably heard the terms debit and credit in passing when someone's talking about accounting and bookkeeping, and that can sound very confusing within the personal finance world of debit cards and credit cards. I'm going to give you a little secret. This is what they mean. I'm not kidding. Debit equals left, credit equals right in accounting. That's seriously all it means, left and right. But the important thing you should always remember is all total debits equal total credits at all times. That'll get important in a minute, but just remember, debit on the left, credit on the right. Now, all accounts have what's called a normal balance. That just means positive, that normally an account is going to have a balance on the debit side or the credit side. So in debit balance, you'll see assets, expenses, and losses. And normal credit balance will be liabilities, owner's equity, revenue, and gains. Now, if you're recording a decline, you don't subtract, you use the other side. So if you're going to be subtracting from an asset or you're lowering an asset, you wouldn't subtract from the debit side, you would add to the credit side. Again, this will get a little bit clearer in a moment. Now, in double entry bookkeeping, every transaction affects at least 2 different accounts. That's where the double entry comes in. You don't just put money into the checking account. There has to be a balance to what that money was for or how that money came in. And there's literally no exceptions to this. Now, you could have 1 debit entry and 1 credit entry. That's the most common. You could have 3 debits and 2 credits. You can have 5 debits and 1 credit. Any combination. What's important is that the total of debits and credits with each transaction are equal, and there are literally no exceptions. So to give an example, we're going to go to the grooming industry, which I'm most familiar with, and Mary G. Roomer is going to be opening Puppy Love Grooming Salon. We're going to go over 6 examples of business transactions, how they're structured, and how the accounting equation stays balanced. So here are the 6 transactions that start Mary's business. She invests $50,000 from personal funds. She gets a business loan for $100,000 for her building. She purchases 3 tables for $4,500. She purchases $500 of office supplies with her business credit card. She makes $450 in grooming services on her first day, and she makes her first loan payment of $1,000. So Mary decides to start the business of her dreams, a grooming shop, and puts in $50,000 of her personal money. So within the background of the accounting software, this is what happens. Her business checking account is increased. This is an asset. It's increasing by $50,000. That's on the debit side. And equity, which is normally on the credit side, goes up by $50,000. And GR, by the way, stands for her initials, Mary G. Rumor. So we have an asset that went up by $50,000. We have equity that went up by $50,000, and everything's equal. So the next thing she decides to do is buy a building for her salon, but she doesn't have $100,000 to pay for it outright. So she goes to the bank and gets a loan for the full amount. So the building is an asset. Asset's normally a debit, so that increases by $100,000 to the building account. She's getting a loan. Liabilities are normally a credit balance, so we create building loan account for $100,000. Assets increase by $100,000. Liabilities increase by $100,000. It's equal, and we go forward. Then she calls up a table manufacturer, Sleeping Boar, and buys 3 heavy-duty electric lifting grooming tables for $1,500 each through the business checking account. So equipment is an asset, so we debit the equipment account by $4,500. But what about the cash from the business checking? Well, we're decreasing an asset. Remember, we don't subtract from the debit side. We record it to the credit side to show that it's decreasing. Now, in this case, we're increasing one asset and decreasing another asset by exactly the same amount, and that means our total is balanced. Now, the bank offered her a great rate on a business credit card, so she goes over to the local office supply store and buys $500 for office supplies. Now, in this transaction, expenses are normally a debit, so the office supplies account is debited by $500. Now, the credit card is technically a liability. It is a short-term loan through the business credit card, so that is a liability that increases. $500 to an expense, $500 to a liability, everything balances. And Mary had a pretty good first day. She had $450 paid in cash, and we're going to, for this example, imagine she immediately put it straight into the bank account. Doesn't normally happen, but we're trying to make it easy. So, because she added money to her business checking account, it's a debit into the business checking. And because she made money, revenue, we credit sales because it's normally credit balance. Debits equal credits, and we're done with this transaction. Now, a few weeks later, Mary has to make the first monthly payment to the bank that loaned her the money for the building. Now, unless you're really, really lucky, loans come with an interest rate because you're paying for the ability to use somebody else's money, in this case, the bank. And so Mary was not very, very fortunate, so she does have to pay interest on her loan in each payment. So for this initial payment, her interest and principal are broken down like this. Now, the principal portion of the payment represents decreasing the principal. She's putting this much money towards the original balance. Because a loan principal is a liability, which is normally a credit, we put that on the debit side to essentially lower the total balance. Now, the interest payment is an expense, which is normally a debit, so we put that on the debit side. And then similarly to earlier when she bought the tables, the business checking account is credited by $1,000, representing the total payment. So looking at the different accounts, the asset went down by $1,000, an expense went up by $310, and the liability went down by $690. This is $690 total. This is $690 total. So we're set. Now, there are a few tricky transactions that I'm going to go over very briefly, and there's many more opportunities to look this up, but just very quickly. Sales tax, which in Connecticut we pay sales tax and collect sales tax on quite a few things, is technically not an expense when you are collecting it. It is a liability. The money that you're holding on, that you collect for sales taxes, is being held on behalf of the state of Connecticut. It is technically cash in your account, but it is cash that you owe to the tax authority. So it needs to sit on your balance sheet as a liability because it's not money that you earned or will be spending. Now, inventory gets very tricky when we're talking about taxes, but inventory is technically an asset. You are buying an asset that will be making you money shortly thereafter. So when you buy it wholesale, you are using your cash to increase your asset. Now, when you sell the inventory, it gets expensed as a cost of goods sold, and then the difference becomes profit, and that's more detail than we're going to go into. But basically, keep in mind that the best bookkeeping practice for inventory is to put this in as an asset. Now, if you have payroll, it gets really fun. The federal and state authorities ask us to withhold money from the employee's paycheck to send over to the tax authorities. That money that gets withheld is a liability similar to sales tax. It is not your money. It is the government's money that you're holding on to until your quarterly payment. However, the amount that you match, the amount that is the employer's responsibility, that is actually an expense. And the payroll itself, the wages before deductions, that is the amount that you agreed to pay your employees whenever you hired them, that is your expense, not the net. There are journal entries to help you put this in, and your payroll provider will be able to help you, or your payroll software, but that's very different than just saying, okay, well, my net payroll is my expense for salaries. It's actually less than. You need to use what's called the gross payroll. Now, next on how to care and feed your business finances is a regular checkups. And Kayla's ready to go. Now, she really only likes the car ride and the treats she gets when she's over there, but it is important, as you know, to take our pets to the vet regularly, to have vitals checked, teeth examined, body checked from nose to tail, to make sure that she stays on the road to good health. And for your business, those are your financial reports. These reports provide the insight on how well your business is doing and what changes you might need to improve things. So we're going to go over the two most common reports, the balance sheet and the income statement. Now, this text should look familiar because it's the accounting equation. Assets equals liabilities plus owner's equity. The balance sheet is the report that represents this accounting equation. Now, one thing we need to talk about first is what's called current versus fixed or long term. Now, when I say current, I mean within the next 12 months, and then fixed or long term means beyond the next 12 months. So current assets are things that can be easily converted to cash, like your checking accounts. I mean, literally, that is cash. Your accounts receivable, or money that's due from your customers within the next year, and your stock inventory, because you could liquidate it if you need to. And fixed assets are the things you can't convert to cash very easily. They're fixed in place, your buildings, your equipment. And then for liabilities, this is what's due to be paid within a year, which would include your credit card accounts, your vendor accounts, and the next 12 months of any loan payments you have. And long-term liabilities would be due to be paid beyond a year, so the loan payments beyond the next 12 months. So here's a very basic example of a balance sheet. So sometimes you see assets and liabilities and equity in one long line, but I like seeing it this way so that you can actually see, like it says on the label, that everything's in balance. You can see on the left side for the assets, this particular business has $10,000 in current assets and $120,000 in fixed assets for a total of $130,000. And then we've got $20,000 worth of current liabilities and $110,000 in owner's contribution in loans. And as it says on the tin, everything's in balance. Now you'll notice that it says up at the top, at the third line, as of the 30th of June. That's because the balance sheet is a snapshot. It looks at one particular day in the life. Certainly you can compare balance sheets from one day to the next, and a lot of businesses will compare end of month or end of year, but it does not represent anything other than one period of time. Now, what information does the balance sheet provide you in terms of health? Well, if your assets are bigger than your liabilities and your equity is bigger than your liabilities, then you're actually in pretty good shape. However, if your liabilities are greater than your equity, then your business owes more than it can claim. So you're going to need to take a look at your bills and revenue figures a little more closely. Now, a really bad one is if your liabilities are bigger than your assets, because that means your equity is negative, and you need to take a 5 exclamation point, very hard look at your business practices. And then take an even deeper look. You can go look at those current liabilities and compare them to the current assets. That's your business's working capital. If your current liabilities are greater than your current assets, you may have a liquidity problem in your near future, and you'll need to take a look and see how you can fix that. Now, most people think of the income statement, otherwise known as the profit and loss or the P&L. And like it says on the label, this report lists your business revenue minus any expenses, and that equals your profit if you're positive and a loss if it's negative. Theoretically, you could have a break even where the result is 0. I've personally never seen it happen other than in a textbook. So here's an example of a very basic income statement. You have your income at the top, followed by cost of goods sold, then a list of expenses showing a net profit at the end. Now what's important here is that third line says month ending 30 June. That means we are looking at a period of time for revenue, not just one day. If you really wanted to, you could look at one day's worth of revenue and expenses, but if you paid a high electric bill on a slow sales day, it's going to look like your business is tanking. So most businesses will look at income statements on a monthly and a quarterly and a yearly basis. And some accounting software and business management software can allow for custom date ranges if you have a fiscal year, or if you want to see how your business performed before and after a new service or product offering. And if you had to apply for the CARES Act, you actually did have to do something slightly different. You actually had to look at, for the PPP, you had to look at your income at January 31st of 2020, not December 31st, 2019. So there were some people who were scrambling to get that calculated. Now, all of the accounting software options are going to have balance sheet and income statement at the very top, as well as any other accounting modules within business management software. Some other reports that you might be interested in would be the statement of cash flows, aged accounts receivable for those of you who bill your clients, aged accounts payable for those who to track how much you owe to other vendors and others. Now, we don't want to think about something that's critical, but it's necessary: injury and illness care. Okay, I promise you, Biller got a lot of good boys and bacon pieces for enduring the humiliation of this photo. But this is what happens whenever you can't prevent a dog fight or a skunk encounter, or, I'm not lying, a tail sprain. Our dog Kayla actually wagged her tail too close to the fence and sprained it. It was really sad. We take steps to keep our dogs happy and healthy and safe, but sometimes boo-boos happen. And the same goes for your business. Boo-boos will happen. Your store gets burgled. That computer that costs twice as much as the last one worked for half the time and needs to be replaced. You need to have contingency plans in place for these financial oopsies. Things like lines of credit, business insurance plans, and emergency cash loans. Now, these are best discussed with your insurance and lending agents. The one thing you never want to be in a situation of is where you can't make payroll. Now, finally, in how to care for our business and our pups is vaccinations and preventative medicine. So as we mentioned earlier, no matter how well we want to take care of our pets, we can't prevent all bad things from trying to enter their world. We don't want to think about it. Goodness knows we keep our houses clean and our yards clean, but we just can't prevent all these things from happening. What we can do, though, as pet owners, is we take precautions. We give them vaccinations. We give them preventative medicines like heartworm pills and bug repellents to prevent the bad things from getting onto or into their bodies and causing harm. Now, in business, we call these preventive measures internal controls. There are external controls. That's the parts of your company controlled by external entities, such as laws about taxes and such. But the internal controls are what you put into place to safeguard the business. Now, most of these people are familiar with and already do. Your passwords and firewalls to keep outsiders from hacking records, you lock the door, you lock the money box, etc. But what we need to talk about also are the things that can make business owners uncomfortable, and that's particularly measures to prevent internal theft and fraud by your employees. You hired your employees because after the application and interview process, you feel like you can trust them, otherwise why would you have hired them? But you need to only take trust so far. So to understand why these are important, we're going to go over a concept known as the fraud triangle, and that was developed by a criminologist named Donald R. Cressy. Now, according to Cressy, the process that precedes fraud goes something like this. An employee feels some sort of personal financial pressure, sees an opportunity to perpetuate a criminal action, is able to rationalize the crime, and then commits it. So here are a few scenarios. My husband's gambling debts are going to ruin us. The boss put me in charge of the petty cash box, but never checks the receipts. I'll pay the money back as soon as the gambling debts are under control. Next example. My son needs really expensive dental work. The boss gave me the cash sales to bring to the bank and told me to just fill out the slip myself. I haven't had a raise in so long, it's ridiculous. I've got to get a better apartment. The crime in my neighborhood is getting worse. The boss never asked me for details on my expense report reimbursements. They'll never miss this small amount of money. It barely makes a dent in the bottom line. I'm sure you can think of more creative examples, but I hope they're not from personal experience. So what can you do? Well, there's literally nothing you can do about the pressure or the rationalization. Short of taking full responsibility of your employees' lives, you have no impact on the pressure, and you cannot get into your employees' minds to affect their rationalizations. But what you can do is take away the opportunities for them to commit crimes. Create and implement procedures that will prevent them from being able to steal. So there are several options, but here's a few basic ones. One of them is requiring two-party verification of bank deposits and cash register drawers. For example, you have one employee do it and a supervisor verify it. Do not let anyone share passwords on computer systems or accounts at any time. I am being totally serious about this. I know it's very common, but one of my clients that I consult, who consults with me, they run a business management software for grooming and daycare, actually came to me and said, I had a client who wanted me to figure out where the money was going from the till that kept getting, losing cash, but they couldn't help the client because she had shared the cash drawer account with all 7 employees. There was no way to figure out who actually was committing any crimes. That's very easy to fix. Just make sure everybody has their own access. Limit the access to bank and credit card accounts, especially if you outsource your accounting. You can actually, with most banks and credit cards, offer as what's called read-only access. That's where the bookkeeper or the accountant can look at the transactions, but cannot have any access to your money to be able to spend it or transfer it. Outsource your payroll as much as possible. Payroll tax embezzlement is huge, and you don't always find out about it until it's too late. If you can't outsource it, just segregate the payroll duties so that one person's not in charge of everything. Always require receipts for all reimbursements and petty cash payments. Have your employees record manual cash drawer openings. Just say, I had to open the drawer at this time, and I had to do this for. You actually, for some point of sale systems, will see that within the options where you have to actually type in why it was opened. Now, for those who feel these practices might make their employees feel like they're no longer trusted, I want you to consider this. By having these procedures in place, if something does look wrong, your employees will have the backup that they did what was required in the procedure, and so the problem came from another source. So let's say, for example, the point of sale system shows a different amount in the register than the end of day count. But if the drawer count was verified by both an employee and a supervisor, you need to take a closer look at things. So Reagan may have popularized the phrase trust but verify. It does still work for business internal controls as well. Now, finally, start as early as possible to get these systems and procedures into place. Now, this is Biller when he was 15 weeks old, taking a break from wreaking havoc with his teeth on a backyard stick. Icy's a master deconstructors of fallen branches, and just basically looking adorable. But by this time, he had already learned to sit, lie down, stay, speak, and rest quietly in his crate. Because early work and care with puppies is essential for them to grow up to be happy, healthy, and well-behaved adult dogs. So it goes with your business. If you're a new business owner or a not yet but I can't wait business owner, you should put these plans into place as soon as possible. And if you're watching this as a more seasoned business owner who might be thinking, I got some work to do, don't worry. There's a saying that goes, the best planted tree is 20 years ago, the second best time is now. So start getting your processes into place and go plant that tree. So the dogs have put in a lot of effort here, and I think it's time for them to take a well-deserved nap, and I really think they did a nice job in helping. Now, if you are interested, I do have a free bookkeeping task checklist that goes over things that you should start doing on a daily, weekly, monthly, quarterly, and yearly basis. It's a very simple little bit.ly link right there. Feel free to go in. You'll put your basic information, and you can download it immediately. And I'd just like to say thank you for attending, and I'm happy to take any questions you have. No questions?
Jeri Ann, we can wait another minute or so if anyone wants to either type out their questions or if you're able to unmute yourself, feel free.
Yeah, please do.
But this was a great presentation, and your dogs are adorable, and I very much appreciate you sharing your knowledge with us. But again, thank you, Jeri Ann, and if anyone has any questions, feel free to put them in the chat box. If you're thinking, we'll give you another moment or so. So how can people reach you if maybe a question comes up or?
What's actually on, the information is right there, and I'll put it in the chat. If I can find the chat. Oh, here we go. Sorry, I'm not used to panelists, so I'm trying to find everything. All right, so it's
So you could reach Jeri Ann at info@sunstonebookkeeping.com, 203-816-5043. And then her website is sunstonebookkeeping.com. So I think that's about it. I will send out this recording as well as the presentation and the link for the checklist. Jeri Ann, do you have any more, anything else to say?
No, I'm just happy I had a chance to give the presentation.
Great. Well, I thank you so much, and I thank everyone for spending their lunch hour with us. So thank you again, and I hope you have a great day.
You too.